everybody. This is Toni Turner, and welcome to the market now as of Friday, March 19th, right at the market's close. Well, the S&P 500 and NASDAQ rose today, lifted by Facebook and energy shares as U.S. Treasury yields took a break from a recent surge. The yield on the U.S. 10-year notes, which has risen sharply in the past 7 weeks on growth expectations, hovered near a 14-month peak at at 1.742%. And on that note, let's go on to 3 charts that should give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. We keep an eye on this index because many stocks, actually most stocks, will follow the S&P 500 higher or lower. So that is why we keep such a close eye on the SPY. Now we can see here, if we look at this chart, that on March 17th was actually Wednesday of this past week, the SPY made the most recent all-time closing high at $397.26. Now it dipped down yesterday, Thursday, and of course today, as you can see, the SPY, look at this tiny green candle here, you can see the SPY landed on the red line, which is the simple 20-day moving average, and that's coming in at $388.22. So you can see it right here, and that's where we ended today. Now, we can, if you look at the 20-day moving average here, something interesting. The SPY has walked up and stayed literally above the 20-day moving average since the end of October of 2020. Walked up that line, then it dipped down, as we know, in January, then jumped up back over the red line again, then started dipping today. And now that red line, the 20-day, is moving horizontally. So we've had quite a run here. Certainly since March of last year, when everything was so hectic. And we have had a move up here, even though we had some dips here in September, October. But we've managed to stay above that red line now from literally the end of October, with a couple of dips here. And now that 20-day is moving sideways. So just wondering if, by any chance, the SPY is getting a little tired. We've had an incredible uptrend here. Okay, let's go on now and talk about the 50-day moving average, which is coming in at $385.38. That's coming right underneath here. So we want to be careful to see if these two lines come together. That's going to be pretty important, and hopefully the SPY stays above them. Now, when I captured this chart today, right before the close, the SPY was trading at $390.56. That's about $39.05 on the S&P 500 itself. So you can see we're still in an uptrend here, certainly in the near term. But the question that we have to think about here is, does the SPY have the buyers? Are the buyers staying? And they may well. But we want to be careful here. Are the buyers staying in the SPY or the S&P 500 stocks? Now we know that now we have resistance up here at the highs here at $398 or about $39.80 on the S&P 500 itself. Again, we have support, potential support at the 50-day moving average, which is coming in at $385.38 today, right near the close. And then if we move down a little bit, we know we've got support here at about 370. So we also have October highs back here. Right here, we have that line we can draw. If I can draw it straight across, I should be able to get it in here right about 354, 355, 354. And that, by the way, is where the 200-day moving average is coming in, the black line. So we've got a lot of potential support here should the SPY need to pull into a rest stop, take a break. What I do want you to note, though, here with me is look at the extended volume here, and I've pointed this out to you before. We see a lot going on here. We see a lot of traders making a lot of trades where the SPY is, especially since the middle of February and then on through where we are today. A lot of volume here. You see this push down here. This was volatile candles, wide range trading days. So definitely we have the bulls and bears doing a tug of war. Where we are right now, it's calmed down a little bit in the past week and a half, but we've got some pulling and tugging going on here. So we want to be careful. We want to make sure that we keep our stops in place. We want to make sure the SPY stays above this 370 line. That's very important should it actually fall below the 50-day moving average. So for that reason, please, again, trade very wisely and make sure your protective stops are in place at all times. And now we'll go on to our second chart for the day. This is a chart of the Invesco QQQ, symbol QQQ. As you all know, this is the ETF that closely follows our NASDAQ 100, very important index in our stock market. Of course, the top holdings in the QQQ include Apple, Alphabet, Amazon, Facebook, Intel, Microsoft, that whole group. Now the QQQ, as you can see, it's come down. It made this prior all-time closing high back here on February 12th at $336.46. It jumped up a little bit on the next day, and then it rolled down to the downside. So we can see here toward the end of February and right starting the 1st of March, it made a pivot low on March 5th of $297.45. We can round it off to 300 if we want. Now, as you can see today, the QQQ has fallen below. When I captured this chart today, it's now below its 50-day moving average, unlike the SPY, which is above it. But the tech stocks have given up some ground here for sure. And today, when I captured this chart, the QQQ was trading at $313.92. So it did move down to this low at $297 and change, right about the first part of March 5th. Then it rallied back up. Note here how what was support on the 50-day moving average is now acting as resistance. Was support is now acting as resistance. So again, the tech stocks are down today, a lot of the momentum stocks, and again, we are closing here at $313.92. Now, we've got support here. We had support before at 313, and we have it again at 313, right here at 313, 310. You see where it was before in February. So the more times price touches a line and then bounces above it, the more times that happens, we call it support. Of course, the more times it falls below and then can't get above it, that's important too. In this case, about a week and a half ago or so, the beginning of February, and back through the beginning of February, it was acted as resistance, but then we had enough strength here, and we had enough buyers for the Qs to get it back above this all-important 313 line. Now, the question is, since it is trading below the 50-day moving average at 321, that could act as resistance again. We're kind of caught here between this 321 and this 313. So we also have these highs here from October and November at 297 and 299, again coming along right here and catching up with this 300, which is close enough, right? So was resistance back here, is now support. So we've got these lines here. What's the bottom line here? What does it all mean? Let's keep an eye in the coming week on that 313 support. Let's keep if it happens to fall below that, we definitely want the Qs to stay above that 300 support, because now they're below the 50-day, and that's important. We can look at this 200-day moving average coming in at about 288. So that would be our next line of defense, and we've got a little support at that level from back earlier in November. So lots of potential support here, and probably a lot going on in the coming week. Tech stocks are affected by higher interest rates. If interest rates continue higher, you need to know that. So especially keep an eye on your protective stops, especially if you're holding tech stocks, and stay safe. So let's go on to our final chart for the day. We're going to look at a chart here we haven't looked at in a while. This is the iShares Home Construction ETF. It has 46 holdings. The top holdings are D.R. Horton, Lennar, Pulte Group, Lowe's, Home Depot, Sherwin-Williams, all of these companies in the home building industry group. Now, I don't know if you've asked around in your town or your neighborhood, but I know where we live, and from reports I've heard all over the country, the home builders are just going crazy, and they're raising home prices, new builds we call them. They're raising those prices. It seems like every week, and some of them are indeed raising home prices every single week. And one of the, actually, I did talk to a gentleman in a sales office for new homes a week ago, and he said, "Are you kidding me? These home builders are making a fortune." So not because he said that, but because I like the chart, I thought today we could take a look here at the iShares Home Construction ETF. Now we know, again, it has 46 holdings, and I told you who they are. So we can look back here, we can get a look after trading all last summer. Look all last summer at these home builders. We can draw a line here like that. Yes, it did pop up a little bit, but after coming up last summer, I'm looking here at the hard left part of the chart at July 2020. After it moved up here into the 57, 58 range, then it started moving in a pretty much horizontal range, and we had the lows here at about 52. We had the highs coming in here at 60, even a little higher at one point, but generally traded in a range totally sideways, moving up and down over its 50 and 20-day moving averages here all the way through the summer until this January. And then all of a sudden in January, the home builders took off, and they jumped, the ITB moved up very quickly here, up to about a high here of about 63, pulled back, then moved up again, almost forming what you could say, gee, Toni, that looks like a head and shoulders pattern to me. But guess what? When head and shoulders don't play out and they actually break higher, that can sometimes be a pretty good positive signal. So the ITB did look kind of like head and shoulders, and it did move back down, and then all of a sudden it broke out here again. Now, will higher interest rates affect the home building industry group? Absolutely will, but they're still incredibly low for what we've been used to over past years. So what I'm seeing here as I look at this chart, the ITB, when I captured the chart today, was trading at $65.45, right near the close here. It did pop up actually on Wednesday of this past week to an all-time closing high on March 17th at $67.16. Now we can see it's trading above its 20-day moving average at 62.58 and its 50-day moving average at 61.37. So the 50-day is still moving higher. The 20-day went horizontal for a little bit and is now moving up again. Unless we see a much more dramatic rise in interest rates in the coming week, if the ITB can remain above, here we go, the 50-day moving average, again, coming in at 61.37. If the ITB can remain above the, actually, I'm going to look at the 20-day here too at 62.58. So if it can remain above the 20-day moving average at 62.58. If it can remain above that in the coming week and the market is positive, I will add a small share size of the ITB to my trading portfolio. Now, I am going to put my initial stop down here below the 50-day moving average at $61. If you'd rather put yours a little lower, you are welcome to, of course. Just put in something. Make sure you are protecting your trade. So I'm putting in my initial stop at 61. Now, if the ITB comes up, if it moves higher and trades above, it'll be this trend line and this high here from the 17th this week. If it does that, so if it trades above 67.50, I will add more shares to my position. And of course, by then, I will have a trailing stop. So if the market's still looking good next week, you may want to keep an eye on the ITB. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or simply click on the orange button below. And now, let's look at some final thoughts. Question for this week is, when I trade, do I ever find myself struggling? When I trade, do I ever find myself struggling? Do you ever feel as though you are swimming upstream or against the tide? Because if you find yourself struggling when you trade, please go over the following 4 points with me and determine if you're engaged in any of them. And I remember struggling dramatically when I was a novice trader. So, and these are the points that actually helped me a lot. First of all, number one, maybe you don't have a trading plan for each of your trades. Do you have a plan for each of your trades? Perhaps you are impulsively hopping in and out of trades without looking at longer time frames, establishing support and resistance zone like we've just been doing. Maybe you're not using protective stops. Maybe you're not checking your risk-reward ratios. Maybe you're not thinking about your profit targets. So all of those points for number one are very, very important to do. Have a plan for each trade before you enter. Where are you going to get in? Where's the best price? Where's your protective stop? And where do you plan your profit target? And if any of these are confusing to you, pick up one of my books, and they explain each and every one of those in those books. Point number two we're making today, maybe if you're struggling, you are trading against the trend of the major indices. Now, unless you're a highly experienced trader, it is important to trade with the market. So, for example, today the S&P 500 was going up, not dramatically, but it was going higher, and the market is in an uptrend. So yes, you would go long in that case unless you're a more experienced trader and know how to go against the market trend. Okay, number three, maybe you're chasing stocks and then maybe you're getting in too late and then you're getting hammered by profit taking. That's easy to do. You see someone on CNBC and they say, oh, buy this stock right here, and you jump in, and then 10 minutes later the stock starts down dramatically and you were chasing it. You didn't look to see if it was in fact a good setup or not, and getting in too late. That can end up being quite a struggle in and of itself. So please don't chase stocks. That never works out well. Number four, perhaps you are trading stocks that are too volatile, and in an attempt to recover lost capital, some novice traders jump into stocks with wide daily trading ranges, and that's not a good idea. So if any of the situations I just mentioned sound familiar to you, resolve to place those actions with positive ones. Always have a well thought out plan in place before you enter a trade. Always evaluate the market environment before you enter a trade and trade in line with the market direction. Is it in an uptrend? Yes or no? And if it is, you may want to go long, and if it isn't, you either sell short or stand on the sidelines. Number 3, as I said a minute ago, when you plan your trade, pinpoint the best entry price near support and enter there. If the stock runs away from you before you enter, let it go without you. Plenty of opportunities await you with good entries. And we talked about number 4, in an attempt to recover lost capital, some novice traders jump into stocks with wide daily trading ranges, volatile stocks. This isn't a good idea, as the most volatile stocks are traded by institutional traders who always have a heck of a lot more information than we do. So to recover lost capital, and we've all been to that place, trade conservatively and trade orderly stocks so you log more wins than losses. Remember, in trading, despite what you think, and maybe we've seen lately, slow and steady always wins the race. Okay, so finally, if you'd like to become a more successful trader, check out my trader training programs. To see of all of my online trading programs, again, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.